Welcome to our comprehensive analysis of the Australian dollar versus Japanese yen currency pair. In this presentation, we'll examine the AUD/JPY performance from September 15th to 20th, 2025, providing you with key insights into recent price action, technical indicators, and trading strategies. The AUD/JPY pair has experienced significant volatility during this period, influenced by major central bank decisions and economic data releases. Whether you're an active Forex trader or simply monitoring currency markets, this analysis will help you understand the current market dynamics and potential future movements. Let's dive into the details of what's been driving this important currency pair and where it might be headed next.
Looking at the current market data for AUD/JPY, we can see the pair closed the week at 97.558 Japanese yen, showing a daily decline of 0.31%. This represents a slight pullback from recent levels. The day's trading range was between 97.246 and 97.974, indicating moderate volatility. When we examine the performance across different timeframes, we notice an interesting pattern. While the short-term performance shows weakness with a 5-day decline of 0.65%, the longer-term trend remains positive with a monthly gain of 2.94% and an impressive 6-month performance of 4.09%. This divergence between short-term weakness and longer-term strength is a key characteristic of the current market environment. The price chart on the right illustrates this recent consolidation following a period of upward momentum. What's particularly noteworthy is how the pair has maintained most of its monthly gains despite recent headwinds from central bank decisions and economic data releases. This resilience suggests underlying strength in the longer-term trend, even as short-term pressures have emerged. As we continue our analysis, we'll explore the technical indicators and fundamental factors driving these price movements. Turning to our technical analysis, we can see a mixed picture across different time frames for AUD/JPY. The action bias system shows upside bias on hourly, daily, and weekly charts, but interestingly, a downside bias on the 6-hour time frame. This divergence is significant because it suggests short-term bearish pressure within a broader bullish trend. Essentially, while the longer-term direction remains positive, we're seeing some consolidation or potential pullback in the immediate term. Looking at specific technical indicators, the RSI at 58.51 sits in neutral territory, neither overbought nor oversold. The MACD reading of -0.52 shows slightly bearish momentum, while the price remains above the 55-day simple moving average of 96.46, which is a bullish signal. On the chart, we can identify key support and resistance levels that traders should monitor closely. Immediate resistance sits at 98.00, followed by 98.40, while support can be found at 97.20 and the more significant level at 96.50. The overall technical picture suggests a neutral stance with conflicting signals. Price is currently trading between key support at 97.20 and resistance at 98.00, maintaining the longer-term uptrend structure but showing signs of short-term weakness. This technical context provides the foundation for our trading recommendations, which we'll explore later in this presentation. 3 major market events dominated the AUD/JPY landscape during the period of September 15th to 20th, each having a significant impact on the currency pair's performance. First, on September 17th, the Federal Reserve cut interest rates by 25 basis points, bringing the rate down from 4.50% to 4.25%. While this cut was widely anticipated by markets, the accompanying commentary from Fed Chair Powell was more hawkish than expected, suggesting fewer rate cuts in 2026. This mixed message created a neutral impact on AUD/JPY, with initial Australian dollar strength followed by consolidation. The following day, on September 18th, Australian employment data came in significantly below expectations, showing a loss of 5,400 jobs versus the anticipated gain of 22,000 positions. This negative surprise dealt a substantial blow to the Australian dollar as it reduced expectations for near-term rate hikes from the Reserve Bank of Australia. You can clearly see the impact on our chart, with the pair dropping sharply following this release. Finally, on September 19th, the Bank of Japan held its policy meeting, keeping rates unchanged at 0.5% as expected. However, the meeting revealed a hawkish tilt, with 2 board members voting for a rate hike to 0.75%. This strengthened the Japanese yen and put further downward pressure on the AUD/JPY pair. The combination of these events created a perfect storm for AUD/JPY, with both currencies moving in directions that pressured the pair, a weaker Australian dollar and a stronger Japanese yen. For the short-term outlook covering the next 1 to 2 weeks, we maintain a neutral to bearish stance on AUD/JPY. The expected trading range is between 96.50 and 98.40, with current price action suggesting a higher probability of downside movement. Looking at the key technical levels, we have major resistance at 99.00, with immediate resistance levels at 98.40 and 98.00. On the downside, immediate support sits at 97.20, with major support at 96.50. The current price of 97.56 is positioned in the middle of this range, indicating a potential decision point for the market. We've identified 2 primary scenarios for the short term. In the bullish scenario, which we assign a 40% probability, a break above 98.00 could target 98.40, with potential to test 99.00 if risk sentiment improves. However, our bearish scenario carries a higher 60% probability, where a break below 97.20 could see a test of major support at 96.50, with risk of deeper correction if the Bank of Japan maintains its hawkish stance. Several key factors will influence this short-term outlook. The Bank of Japan's hawkish tilt, with 2 dissenting votes for rate hikes, the weak Australian employment data that surprised markets, and the upcoming Australian CPI data release, which will be crucial for determining the Reserve Bank of Australia's policy path. Traders should monitor these factors closely, as they could significantly impact price action in the coming weeks.
Shifting our focus to the midterm outlook for AUD/JPY, covering the next 1 to 3 months, we maintain a cautiously bullish stance despite the short-term headwinds we've discussed. The expected trading range for this period is broader, between 95.60 and 100.00. On the support side, 95.60 represents a major level near the 200-day exponential moving average, while the 100.00 mark serves as a key psychological resistance level that could attract significant attention if approached. Our scenario analysis for the midterm shows a reversal from the short-term outlook. The bullish scenario now carries a 60% probability, suggesting that if global risk sentiment remains positive and Australian economic data improves, AUD/JPY could target the 100.00 level. Conversely, the bearish scenario with a 40% probability indicates that a deterioration in risk sentiment or further weakness in Australian data could push the pair below 95.60. This more optimistic midterm view is based on several factors. First, the longer-term uptrend remains intact, as evidenced by the daily and weekly action bias indicators. Second, the AUD/JPY pair is sensitive to global risk sentiment, which is currently supported by a low VIX and a bullish stock market trend. Finally, if global risk appetite remains strong, the carry trade appeal of AUD/JPY could reassert itself. Key factors to watch include the policy divergence between the RBA and BOJ, upcoming Australian inflation data, Japanese economic indicators, and global risk sentiment dynamics.
Based on our analysis, we've developed specific trading strategies for both short-term and mid-term horizons. Let's examine these actionable approaches for AUD/JPY traders. For the short term, spanning the next 1 to 2 weeks, we have 2 scenario-based strategies. In the bullish scenario, we recommend buying above 98.00 on a daily close, targeting 99.00 with a stop loss placed below 97.20. This gives us a risk-to-reward ratio of approximately 1 to 1.25, which we classify as medium risk. For the bearish scenario, which carries a higher probability based on our analysis, we suggest selling below 97.20 on a daily close, targeting 96.50, with a stop loss above 98.00. This presents a less favorable risk-to-reward ratio of 1 to 0.88, making it a higher risk trade, but one that aligns with the current technical and fundamental outlook. Looking at the midterm strategy for the next 1 to 3 months, we recommend a range trading approach. The buy zone is identified between 95.60 and 96.50, while the sell zone sits between 99.00 and 100.00. For long positions, we suggest placing stop losses below 95.00. This strategy offers an attractive risk-to-reward ratio of approximately 1 to 2.5, making it our lowest risk option. For effective risk management, we recommend limiting position sizes to 2% of total capital per trade, using trailing stops of 50 to 80 pips once trades move in your favor, considering partial profit taking at key resistance or support levels, and adjusting strategies based on upcoming economic events, particularly the Australian CPI data and Bank of Japan statements. The chart on the right illustrates these entry and exit points visually, helping you identify optimal trading opportunities. To conclude our analysis of AUD/JPY, let's summarize the key takeaways from our examination of the September 15th to 20th, 2025 period. AUD/JPY is currently in a neutral to bearish short-term trend, though the longer-term bullish bias remains intact. The recent pressure on the pair has been driven by two primary factors: weak Australian employment data and hawkish signals from the Bank of Japan. For the short term, we expect the pair to trade within a range of 96.50 to 98.40, with a bearish bias carrying a 60% probability. Looking further ahead to the midterm, our outlook becomes cautiously bullish, with an expected range of 95.60 to 100.00 and a 60% probability favoring upside movement. The upcoming Australian CPI data will be critical for determining the Reserve Bank of Australia's policy path and, consequently, the direction of the Australian dollar. Critical levels to watch include immediate resistance at 98.00 to 98.40, immediate support at 97.20 to 96.50, and the key psychological level at 100.00, which could become a significant target if bullish momentum returns. The chart on the right illustrates these key support and resistance levels, along with our outlook assessment for both short-term and mid-term horizons. This visual representation helps contextualize our analysis and trading recommendations. As always, remember that trading involves risk, and this analysis is for informational purposes only. Past performance is not indicative of future results, and we encourage you to conduct your own research and risk assessment before making trading decisions. Thank you for watching our AUD/JPY analysis. We hope you found these insights valuable for your trading strategy.